but I don't mind at all, under current conditions, building the cash position. I think when I look at the alternative of what's available in the equity markets and I look at the composition of what's going on in the world, we find it quite attractive.
Most people are aware of market crashes, how they happen, and their impact on the consumers. However, reverse market crashes are not commonly discussed, though they are very important and critical market phenomenon impacting us all. In this video, we will delve into the reasons as to what causes these reverse market crash, similar scenarios that have happened in past, or whether or not a reverse market crash is approaching us in year 2024. Before we move forward, please do consider subscribing to this channel if the subjects of business management and economy are of interest to you. So let us first understand what is reverse market crash. Suppose you invest a small amount of money in an asset, hoping that it will grow in times ahead. In just a few months, your investment grows 10 times. To your surprise, it keeps going up, and in a matter of few months, it grows 1,000 times. And going forward, in another 6 to 7 months, your investment grows by about 1 billion times. This scenario is good or bad? What are your views? Do let me know in the comments. Well, this happened in the German stock market from July 1923 to January of 1924. If you had invested 1000 marks in month of July, you would have got a return of 1 trillion marks by the year end. However, you would have no reason to celebrate as it meant nothing for you, since $1 was equal to 4 German marks when you invested 1000 marks. However, by November 1923, that same $1 was equal to 1 trillion German marks. So in this situation, did you earn money or lose money? Do let me know in the comments. And this is exactly what a reverse market crash looks like. The market surges while the economic system collapses. But what causes a reverse market crash? So stay with me and we review some of the main causes. The market crash refers to a sudden and rapid decline in overall market value of a financial market. The decline typically occurs over a short period, leading to a significant drop in the asset prices. However, the reverse market crashes are opposite. They happen when market experiences an abrupt and substantial increase in the market value. Reverse market crashes often result in increased wealth gap, where the rich become richer and poor become relatively poorer. In other words, the sudden surge typically benefits people who have already been invested in the market, leaving others behind. These reverse market crashes are quite rare, but happen due to two fundamental reasons: inflation and debt mismanagement. While they don't happen very often, but they have happened quite a few times in some countries to make it a quite legitimate concern. Next, we will also discuss some of the reverse market crash scenarios which have happened in past. Hopefully you would have subscribed to the channel by now. If not, then please do consider subscribing. So let us now move forward and understand some of these examples of the similar economic scenarios. To better understand how a reverse market crash works, it helps to understand the instances of hyperinflation. Following are some of the main examples which have happened in Germany, Zimbabwe, Argentina. In the post-World War I Germany, they were forced to pay tens of billions as compensation for civilian damages. This forced them to print money at an astronomical rate, which led to an hyperinflation situation. Germany accrued so much debt that by November 1923, $1 was equal to 1 trillion German marks. Unfortunately, this social disturbance led to social unrest and collapse of their currency and contributed to the rise of extremist political movements and stock market and other financial market situations I have already discussed earlier in the same video. Another example of reverse market crash happened in Zimbabwe in the year of 2008. Their hyperinflation peaking at around 79.6 billion% in November 2008 was primarily caused by extreme money printing by the government. This occurred mainly due to awful economic mismanagement, political exploitation and careless money printing to finance military operations and food production. During this time, Zimbabwe printed $100 trillion notes. However, each note was worth just 40 cents in United States of America. Unfortunately, this hyperinflation led to the collapse of the financial system of Zimbabwe and widespread poverty. By the year 2008, most basic goods became unaffordable and the economy experienced significant disturbances. And the most recent example of hyperinflation is happening in Argentina. Just a few months ago, Argentina's annual inflation hit 142%. However, it has always been bad in past as well. In fact, their average inflation since the year 1980 comes out to 206% per year. In other words, on an average, average, their prices triple every year. Argentina's recent hyperinflation crisis is largely due to the excessive printing of pesos, which is Argentina's currency, by its central bank in an attempt to finance the country's fiscal deficit. However, economic mismanagement, corruption, and instability have further worsened the situation. In fact, the extreme money printing in over last 10 years has resulted in Argentina's pesos losing 99% of its value against the US dollar. I hope the video would have given you some clarity on reverse market crash. In fact, of late, some experts or commentators have been discussing about reverse market crash hitting United States of America as well. Do study their debt and economy and let me know in the comments what is your view about reverse marketing crash hitting United States of America. You may also write to me on my mail ID, which is mentioned in the description, and I will revert back to you. Be inspired, keep building.